It's Saturday, it's the 28th of January, and I'm out of hospital. And I want to show you what I was going to do on this Eventbrite activity that I was unable to fulfill. And I want to show you how to work a past examination question. Now, there's going to be no fancy editing in what I do. Yeah, it's all about spending some time with you working through a past examination question from the ACCA practice platform. Now, the style of this question is relevant if you're doing the March exam or if you're doing the June exam for 2023, but it will not be relevant for the September 23 exam onwards, because there's a change in the way that questions are going to be, group accounts questions are going to be tested. But that's the subject of another video. I want to put in practice with you, the principles of just moving on. I want to show you how to earn the easy marks. I want to show you what is achievable in the time that is allowed. And when I finish going over this question, I'm going to show you some additional resources and talk to you about how I can help you pass this examination. So let's consider this question of sterling, which is taken from the September-December 2022 examination. And the first thing that I always do in these questions is to not read the requirement, but to control copy and paste the requirement into the answer booklet, into the response option. So that's the first thing that I do. And then I need to break that up slightly. And today I'm going to concentrate on part A of the question. And one thing at a time. And part A of the question is broken down into two parts. Using exhibit number one, explain how Berthold will be accounted for in including calculations in the consolidated profit and loss for the year end. And explain how the goodwill is going to be calculated. So I think it's really important that they understand that we are thinking about the consolidated profit and loss account. That we've got to do the goodwill for 6 marks, 8 marks, 6 marks, 14 marks. That is why we're thinking here, I'm thinking here, that overall we've got something like 25 minutes, half an hour to do it. Now, we've got some information here in the main part of the question. They're preparing the individual accounts and consolidated accounts, and our year end is 31st March X9. I think that's important to be aware of. And as we're doing part A, we are interested in Berthold. And what we're interested in is that it buys 40% of Berthold in January X7. Now, my gut reaction is that is probably going to be an associate. That's probably going to, therefore, if it's an associate, it's going to be equity accounted. You're going to have significant influence. And the fact that we then buy a further 35% in December X8, the fact that we're buying 35% during the accounting period is going to transform this associate into a sub. Our year end is 31st March X9. And so if we are buying it 35% in December X8, that's a step acquisition. I'm assuming that's the case. All right. Now, malting is too much information. Batch is too much information. I've got an exhibit about Berthold that I need to read as well. And that information needs to be taken into account. So I'm kind of vaguely aware as to what I'm trying to do. I've got some numbers to do. I've got some explaining to do, and I've got to sort out the goodwill story. So what's the information that I have about the acquisition of Berthold? We've paid 25 million for 40%. Back in the day when there were 10 million shares. And at that time, the retained earnings were 18 million and there were no other reserves. Now, there's confirmation. We've exercised significant influence. So I'm absolutely right in making my assumption that it's an associate and we're going to go for significant influence, going to go for associate status. We've then got a further 35% being bought. So this is the step acquisition. And this is details of the change that will occur during the accounting period. We've got the fair value of the net assets to be 55.3 at that time. So we know the fair value of the net assets at the date of acquisition, and we've got the retained earnings to be 42.3 at that time, whereas when we originally bought the associate, the retained earnings were only 18. Now, there's some difference to do with fair value adjustments to do with land, and we've got a market price of the share at 9.2. Now, the market price of the share at 9.2 is at the date of acquisition, and that is relevant because we're measuring NCI at fair value at the date of acquisition. So, you need to read the question and you need to read the requirement in order to be able to answer the question. Now, what is the requirement again? Explain how it will be accounted for in the P&L with calculations. So we've got two parts to it. We've got to explain, and we've got to include some calculations. But actually, I think the two parts is probably more to do with the fact that it was in the beginning, it was an associate. So when do we make this step acquisition? When do we make this further investment? We made this further investment in December X8. All right. So our year end is 31st March. So what we've got there is the last 4 months. It's a sub. December, January. So the first 8 months. I want to start writing things down. For the first 8 months of the period, Sterling holds 40% of Bert. We can call Bert hold B in future, Bert hold B. It has significant influence. Don't like the capital letters there. It has significant influence. Now let's make a new point about that. This means that B is an associate of the Sterling Group. And if we want to shorten that in future, we can say S. Associates, oh dear, too many capital letters. Associates are equity accounted in the group P&L, because that's what we're answering, isn't it? This means, well, what does it mean? What does equity accounting mean? It means a single line. This means we include a single line, the share of the associates' profit after tax, and I think we can use that abbreviation. Now, to me, we then got to demonstrate that. Time apportionment is relevant because we've only had the associate for the first part of the year. Time apportionment is relevant. Now, you could go and do a separate spreadsheet calculation. I don't think it's necessary. What we're talking about is owning 40% of the associate using equity accounting. Now, what was the profit for the year? The profit for the year was 11.1. So we've got that 11.1. So we've got 40% of 11.1, but we only have got that for 8/12 of the year. So therefore, this is where I sort of basically get the calculator out and I say, okay, what are we doing here? We're taking 40%. We're taking, 11.1 1, we are multiplying that by 8, and we are dividing that by 12, and that is going to give us a number which is going to be reported in the group profit and loss account, and that number is 2.96. Now, what I think I've done there is answer the first part of the question when it's to do with the associate. Yeah, and we now are achieving control. So on 1st December, yeah, 4 months before the reporting date, a further, what was it, 35%? Yeah, 35% was acquired in B. Sterling, or S, now has control over B. B is a subsidiary. B is a subsidiary with an NCI. Now, you've got to do your maths here, but I think you can do it in your head. 40% plus 35% gives you, what, 75%? So you've got an NCI of 25%. And I don't think that requires any real further calculation. This is a step acquisition. This is a step acquisition. The carrying value of the initial investment will be revalued. The carrying value of the initial investment will be revalued, and the gain reported in the group P&L. Let's go back. Let's go back further. It's a subsidiary of 25%. Yeah. The results of the last 4 months. The results of the last 4 months will be acquisition accounting. Will be acquisition accounting. Full consolidation. Yeah. Line by line. Time apportionment. Yeah, and of course my spelling is bad, but I think it's you're capable of understanding what I'm doing. I don't want to spend too much time. I'm writing in short, sharp, simple sentences. This is worth 8 marks. If it's worth 8 marks, it's worth 15 minutes. I've only got a little bit of time left in order to sort out really what I want to do. Now, potentially there are some numbers to be involved. One of the numbers that I could get involved in is the NCI. So the profits attributable to the NCI, that would be reported in the group P&L. Yeah, the profits attributable to the NCI would again be, we've talked about them being 25%. So 25% of the 11.1, and this would now be multiplied by 4/12, and we could come up with a number there. But I'm a little bit, I don't know what the word is, ginger or hesitant to spend time on doing that. I can come back and sort that out in a minute. There will also be a gain arising on the, not the retranslation, but there'll be a gain arising on the difference in the carrying value. So there will be a gain to the P&L. There will be a gain to the P&L, based on the revaluation of the initial investment. And that's something that I would need to think about. And I'm a little bit worried about the time, so I might be inclined to move on from that. But that would be based upon the carrying value of the investment, which would be equity accounted, at the date of control. And then I would compare that with effectively the fair value. Then I would effectively compare that with the fair value of the investment at the date of control. Now, probably that second number, and then the difference is the gain that you're taking to the group P&L. Now, the fair value of that investment at the date of control, you've got the share price, isn't it? So that initial investment was 40%. That initial investment was 40%. The value of those shares we're thinking are $9.20 at this time. So that would be a way of working out the number, the fair value. We can observe the share price and the number of shares they've got. I think we talked about there being 10 million shares in this sub. Yeah, there's 10 million shares in that sub if you look for it. So we've got there multiplied by 10. And again, if I want a calculator, let me use the calculator here. So this is 0.4, yeah, multiplied by 9.2, and then multiplied by 10. That would give me a carrying value of 36.8. That would give me a fair value of 36.8. But I am super conscious of the time, and therefore I'm going to move on with this answer not entirely being completed. I might come back in a minute and finish it off. But I've got some easy marks to earn in the next part of the question, which is to explain and show how the goodwill in Berthold would have been calculated. So that to me is about step acquisition. That to me is about making sure that you explain how the goodwill is calculated before you do the numbers, because the numbers are always going to be a little bit more calculated, I think. So I could say something along the following lines, and this is pretty generic. Yeah, goodwill arises in the group accounts of the acquirer. Yeah, the parent, that is sterling, when the aggregate, basically the aggregate of what they've paid in the NCI exceeds the fair value of the net assets at the date of acquisition. But it's just going to take me a moment to type all that out. When the aggregate of the fair value of the consideration when the fair value of the consideration paid by the parent, the controlling interest, and the NCI exceeds the fair value of the identifiable net assets of the sub Berthold. Yeah, so we've shown the definition and we have applied it. Now, very particularly, this is a step acquisition. And because it's a step acquisition, the first investment of 40% must be revalued to its fair value at the date of acquisition. All right. What else do I want to say? Well, we know that NCI has been measured at fair value, so we're explaining how the goodwill will be calculated. NCI will be measured at fair value, so it will be based on the share price. And of course, that means that goodwill will be in full. Goodwill will be in full. And there isn't an impairment loss, but any impairment loss is then split with the NCI. Now, you know, what am I doing here? It's 6 marks. So for 6 marks, I've got to explain and that's the explain part. All right, for 6 marks, that's the explain. Yeah, and then for 6 marks, so it's 6 marks explain and show. So then I'm picking up on the show, which is the calculation, because you've got that lovely keyword in there. And what I was doing here, really, if I think about it, and it would help, the 8 marks, I haven't split the explain and the calculations. What I've done here is I've taken the associate, yeah, at the start of the period. That would help the presentation a little bit, wouldn't it? The associate at the start of the period, that's my logic. And then I've shown the subsidiary. Yeah, for the end of the period. Yeah, for the last, 4 months. It's a P&L. There's been a transformation during the accounting period. Yeah, and I'll come back and I'll mark this piece of work when I finish the sort of the stress of doing it all. But I think what I now need to concentrate on is earning some easy marks for doing a calculation of the goodwill that arises. Now, again, you could do this if you wanted to in a spreadsheet functionality, or there's no reason why you can't do it here in a simple form. Now, we're doing the goodwill calculation. We're showing how we calculate the goodwill. And if we're doing that, then there's parts to the investment. There's parts to the goodwill. There's 3 parts. So the fair value of the investment. And we then know that the fair value of the investment is to do with the initial investment, which is to do with the subsequent investment. We're then going to have the fair value of the NCI. And then we're going to add a few more cells, aren't we there? We need a few more rows. So we've got the fair value of the NCI, and then we're going to deduct the fair value of the net assets, and that's going to give us the goodwill. So even if we don't put any numbers in, we've kind of shown that we know the basic principles. We're picking off easy marks. Now, what are the easy marks? We've got here, I think, the net assets given to us over here, weren't they? So there's a fair value estate was acquired for 41. So the subsequent investment was 41. That was a number given to me there, when the net assets were 55.3. So the net assets, we could put it in brackets there at 55.3. Those numbers are given. We don't want to pick up the book value. You want to pick up the fair value. And the fair value includes the land, so that's not an issue. If we're going to work out the NCI at fair value, then we're looking at 9.2. So the fair value of the NCI, we've agreed that the NCI is 25%. We know that there are 10 million shares, and we know that those shares are worth 9.2. We know those shares are worth 9.2. So we've got a calculation to be made there. So let's get the calculator out. Let's clear that. Let's get that sorted out straight away. So we've got here 25%. Yeah, and we're multiplying that by 10. Oh dear, didn't need to do that, did I? Then multiply that by 9.2, and that should give us a figure for the non-controlling interest, which we've calculated. And each of these numbers we're going to calculate is going to get us a mark, I'm sure of that. Now, what we haven't got is the initial investment, and this is the initial investment that needs to be at fair value. But didn't we calculate that up here? Yeah, didn't we calculate that up here? Can't we kind of cheat? Yeah, so we can kind of control, copy, paste that. It's 36.8. Yeah, so that is 36.8. And then we got the initial investment. We can control V. We can put that in. Now, that is the goodwill arising. And if we wanted to get rid of those columns, to delete those columns just to make it look a little bit more neater. If we wanted to put the $1,000,000 sign up there just to make it a little bit neater. Now I'm looking at the time, and you know, I've got some decisions to make about what I do with the rest of my time. Honestly, I've actually earned all the marks available for the calculation of goodwill, but I know that you want me to do the calculation of goodwill, so I will do that so that we can see it is the right answer. So what am I doing here? I'm taking 36.8 and then I'm adding that to 41. Should have done that in my head. Then I'm adding that to 23. And then I'm saying that is equals, and then I'm taking away from that 55.3, which therefore gives me a goodwill figure of 45.5. Yeah, 45.5. I think I've got another 2 or 3 minutes left to finish off this question. And instead of moving on to part B, which is a separate issue, whilst I'm here within the sort of half hour that I've allocated, I could go back and I could try and work out the carrying value of the investment in the associate at the date of control, probably the most tricky thing to do. And how would I work that number out? What I think I would do is I would have to apply equity accounting. So I would want to know the initial cost of that investment. I would want to know the initial cost of that investment. And what is the initial cost of that investment? It's given to me in the question. I originally bought it for 25 million. And then I would add on to that the share of the post-AC. Then I add on to that the share of the post-AC. Now, equity accounting means bringing in your share, which is 40% of the increase in the retained earnings, the profits. There's no other reserves. So at the date of acquisition, it was 18, but the retained earnings when we got control was 42.3. So it's then the difference between 42.3. I mean, not many people got this right in the exam. This is not a pass or fail issue. And I feel like giving up at this stage, you know. I feel like I've not really going to hit the law of I'm in the law of diminishing returns. So I'm into just calculating numbers at this stage. So yeah, come on, Tom, have a bit of discipline. Yeah, you know, students like numbers. I like words. Words are where most of the marks are going to be available. So let's take 42.3. Let's take away from that the 18. I mean, you could program this in a spreadsheet if you wanted to. It's whatever's quickest for you. I'm showing you here a very clear audit trail as to what I'm doing, so you can follow it. A marker can follow it. Realistically, a lot of these numbers are going to be wrong. So you've got to think, you've got to allow the marker the opportunity to, you know, follow what you're doing. So you're leaving an audit trail. That's 47.2, that's 9.72, that's 34. I can do that in my head. That's 34.72. And then if we take the difference between those numbers, that's beyond my mental maths when I'm trying to work things out quickly. So 36.8, yeah, minus your 34.72 gives you the gain that appears in the group P&L on a step acquisition, because you're revaluing that, and that difference there is 2.08. That is your gain to the P&L. But I think we've said that already. How do we get that gain? We got that gain as being the difference between 34.72 minus 36.08. I have to move on. Yeah, because I now have spent my allocated time on this question. Nearly half an hour has lapsed. Let me pause. Let me reflect. Let me go back and mark my own answer that has been created within the time allowed, including reading the information in the question. Now, I was slower at the beginning when I was reading information in the question. This question is worth 8 marks. This part of this question is worth 8 marks. I am suggesting to you that 4 marks is available for calculating and explaining how the associate is dealt with. And how have I earned those marks? I have wrapped a sentence around the word associate. I have used the word significant influence. I've wrapped a sentence around it. I have used the word equity accounting, and I've done a calculation. Bingo. 4 out of 4. I don't care about the spelling. 4 out of 4. When I'm looking at the subsidiary, yeah, what have I done? I have said there is control. Yeah, I have said there is control. I have said there is acquisition accounting. And I have said there is step acquisition. I feel, therefore, that I have gained, the full written marks. I've also come up with a calculation. I didn't finish it, but that actually doesn't matter. And I've done a really heavy calculation. If I hadn't done that 2.08, I think I would still be getting 3 out of 4. Maybe even 4 out of 4. This answer is perfect. This answer is 8 out of 8. I am brilliant. This is within the time allowed. I don't care about spelling. Yeah, this is a technically correct answer. And now we move on to 6 out of 6. And this is about explaining and showing how the goodwill is calculated. If all you do is numbers, you're limiting yourself to 3 out of 6. And you have to get 3 out of 6 fully correct on the numbers to justify passing the exam. You've got to write something. You've got to apply your knowledge. You can't just regurgitate the definition of goodwill. You're explaining it in the context of sterling. Yeah? You're picking up the fact that it is a step acquisition. And you're explaining that with a step acquisition, yeah, you're revaluing that first investment. We've already talked about the impact in the P&L already. And we've talked about how NCI is measured at fair value and how we've done that. I'm really confident that this is worth 3 out of 3. And then I look at my numbers, and there could well be in the marking guide more marks available for doing the calculation than actually there are things there, because I've done the NCI correctly. I've put the figure for the net assets in correctly. I know there's a fair value adjustment, which I haven't highlighted, but trust me, this answer is done within the time allowed, a little bit manically. But if you can produce something like this, happy days. Happy, happy days. And now I want to talk to you a little bit more about resources. So you've been watching me debrief a question on the ACCA practice platform, TestReach, and it's essential that you practice questions on there. What I do on my courses is, those exam questions, I've debriefed myself and I've written my own student-friendly answers to them rather than use the examiner's answers. And of course, there's additional resources that I put on my course. Now, I want to talk to you very specifically about Revision Plus, and this is particularly appropriate. This is particularly appropriate if you're resitting the examination, because if you're resitting the examination, you need additional support, and you need to, think of February as being the month of revision for March, or you need to think of May as being the month of revision for June. And having failed the exam, you need to do something different. Old keys will not open up new doors. I can be the difference between you passing this exam and failing this exam. You need to learn the lessons from the past. And my Revision Plus course is specifically designed to help you get through a resit course. There's knowledge elements there on giving you videos on knowledge, giving you notes on knowledge, giving you quizzes on knowledge. And the knowledge, therefore, is 4 times over, because I want to cover things like groups, IFRSs, ethics, current issues. But to have that knowledge is not enough. You need to have the skills to take, your knowledge and apply it in an exam context. You need to know how to answer the questions. I need to put you in the shoes of markers. I need to give you marking challenges. So I do that for groups, for standards, for ethics, for current issues. I get you to think about how we approach questions and to mark my answers together. I then also want to see your work. So we have marked assignments, 4 marked assignments, groups, IFRSs, ethics, current issues. Small pieces of work, original pieces of work for you to submit to me for marking. And then we've got 2 mocks that I take in for marking. I need that marking. I need to give you the feedback. You need to understand what you're doing right. And you need to understand where you are going to improve. And then there's plenty more mocks on the course that I have debriefed, some original, some past exam questions. So you can effectively now review those yourselves. Really important. I rent space from the ACCA on their practice platform to set my original mocks. Come on my Revision Plus course and you will get that as well as my continued WhatsApp support. So you can access this course quite easily, and enroll on that course. You've got to be careful though. Don't leave it too late. I close this course. You know, I limit the numbers. There's lots of resources on there, and you need 4 to 5 weeks. You need to start this at the beginning of Feb. You need to start this at the beginning of May to do this. All right. So don't hang around. If you want to kickstart your revision, get hold of me ASAP. Get this sorted out, please. All right. Even if you can't afford to come on that course, even if you don't want to come on that course, there are resources out there that you can use that I've created to support you. And perhaps the most famous, or perhaps the best known, is my podcast series, which is freely available on Spotify. I would urge you to listen to those. There's 30, 40 different episodes. Yeah, there's a variety. They're all 10 minutes long. That's the idea. All right. So look, you want to get hold of me, WhatsApp me, feel free to get in touch. I'm here to support you. You've got my number there, my WhatsApp number there. It's slightly obscured here, 07725 350 793. Or if you're dialing in from outside the UK, you need to put a +44 there. But look, good luck. Yeah, good luck. But please, please, please do not rely on luck. Please subscribe to my YouTube channel. Please tell your friends. Please get in touch. Let's fulfill your potential, please.